Okay, great. Well, good morning, everybody, and welcome to our Are You Ready to Borrow webinar. If you haven't gotten a chance yet, please introduce yourself in the chat box and let us know a little bit more about what you're interested in learning today. Well, so just a couple of housekeeping items. Today's webinar is going to be recorded. It will be available on the city's YouTube channel. We should have that uploaded in the next day or two, so you'll be able to pause, rewind, and access this at any time. And our attendee video and audio is off today. So if you have any questions, please use that Q&A box at the bottom of your screen. We're going to wait till the end of our presentations to go through some questions. That way we can give our presenters enough time to get through their content this morning. Cool. So today's webinar is hosted by the City of Charleston's Economic and Neighborhood Services Division. My name is Christina Oth. I'm the Business Service Manager, and I will be your moderator today. We also have Jeremy Coburn, who's the project assistant from our office. He is our technical support, who's having some technical difficulties this morning. So hopefully we'll get him joined on in just a moment. But just to let you all know a little bit about our office, we are really here to support entrepreneurs and small business owners like yourselves to be able to help you navigate the city's licensing and permitting processes and to help you get connected to resources like this webinar to help you be successful. So whether you are starting a brand new business or maybe relocating or expanding your business here to Charleston, we're here to assist you. We've got our website at the bottom of the PowerPoint slide here. It is charleston-sc.gov/bizservices. You can check us out, find our contact information, and see what other resources we've got going on. Cool. So our goal for today's webinar is to help introduce you to some of our lending experts and get you prepared to borrow. We want to show you an array of lending resources that are available to you in our own community, as well as different financial resources and support. So this webinar, we're hoping to get you ready to borrow for our upcoming lender matchmaking event. This is actually an in-person event that we are hosting at the Citadel on Friday, August 2nd, so in about 2 weeks from now, and we will drop the Eventbrite link in the chat shortly. But we've done this in partnership with the SBA for a couple of years now, and it's really your opportunity to meet one-on-one with different lenders and speed date with them to kind of find your perfect match. We'll also have several resource partners on site, organizations like SCORE and the Small Business Development Center. Our offices here will also have resource booths so you can connect with us in person. It's totally free to attend. Registration is required. And again, we're hoping that the information you gather here today will help you prepare for that in-person lender matchmaking event. So we do have a quick poll question to get started. Let's see. We'd like to gather a little bit more about who's in the room here with us today. So we'd just like to know, how long have you been in business? So you can answer if you haven't started yet. Maybe you're checking this out to get some ideas about your financing options. Less than 2 years, maybe 3 to 5 years, or 5 or more years. Maybe you've been in the game for a long time and you're looking to grow and expand. So I'll give this another couple seconds here. Again, how long have you been in business? Well, all right, so I think we've got about half of folks. So it looks like we've got a little bit of a mix. I think we only had half of our folks answer so far, but we've got a few that are brand new, haven't started yet, less than 2 years, 3 to 5, and 5+. So we got a little bit of everything for our presenters to hit on this morning. Cool. So again, we've got a jam-packed agenda today, and I'm really excited to share this fantastic panel of speakers with you all. They've got decades of experience in the financing world. We're going to start with William Furman. He's the Senior Area Manager with the U.S. Small Business Administration. Then we will have Mark Rains. He's a guaranteed government lender for South Carolina with Synovus. And then we have Kate Polcha. She is the Risk Manager over at the Climb Fund. So I'm going to stop sharing my screen so we can get William started. And while he's pulling his presentation up, just a few things about William. Again, he is the Senior Area Manager for the U.S. Small Business Administration right here in North Charleston, South Carolina. He graduated with a BS degree from Clemson University, and he has had over a 35-year career, which is longer than I've been alive, with the U.S. Department of Agriculture and the U.S. Small Business Administration, administering business and economic development programs. William serves the 10 coastal counties of South Carolina, and he is an expert in providing SBA lending programs, government contracting programs, SBA disaster relief programs, which is hurricane season, so this is very important, as well as business development training. So very happy to have William here today, and you can take it away.
Thank you, Christina. You're making me feel my age today. But yeah, it's really good to be here, and I'm really excited about our lender matchmaker. And that's what really this is a kind of a pre-event for the matchmaker, and we've been doing this for quite a while. And it's always a really fun event. I think it's just a really good opportunity for those businesses to get the chance to meet one-on-one with lenders. And so that's why we want to do this today. If you're able to make it to the matchmaker, we want you to be in a good position and understand and have good conversation, fruitful conversation with potential lenders. So just want you to understand, what is involved in business financing. And so let's just take a look at that. But first of all, I just want you to understand who SBA is, all right? And so we like to say we assist businesses to start, grow, expand, and recover. And we do that through really four primary missions. We do it through our counseling programs. We do it through our capital access or lending programs. We do it through government contracting programs, contracting with the federal government. And then, of course, we are one of the major arms of the federal disaster recovery system in the event of a federally declared disaster. Unfortunately, we're not going to have a chance to talk about all of these. We have a couple of, as you heard, we have a couple of SBA partners on this call today as well. And so I'm just going to really kind of give you a high-level overview of SBA and how SBA interacts with these other lenders to provide financing to small businesses. Now, the other thing you really need to know and understand and take advantage of is the SBA Resource Partner Network. Okay, so we SBA actually provide funding and oversight to other organizations so that they can work with small businesses one-on-one to provide professional business counseling and consulting at no cost to the business. And so it's just a really good opportunity for small businesses, whether you're seeking financing, whether you're trying to start your business, whether you're trying to grow your business, or even if you're trying to maybe exit your business, maybe it's time to retire. These organizations can help you through the life of your business. And so here in Charleston, we're very fortunate. We do have four partners, four organizations, and they are all very similar, but have some differences. So we do have SCORE. We have a SCORE chapter in Charleston. They're very active, and now this is a volunteer organization. They are comprised of really business owners, business professionals, and they serve more as a mentor to small businesses. Now they also they do a lot of training, as do all the partners. So these links are live. I think we're going to be able to share our slide decks after these presentations, and so you can go back, and these are actual live links that you can go and reach these partners. So we have SCORE. We also have the Small Business Development Center, or SBDC, as we like to call them. They are affiliated with universities across the state. Again, they have an office here in Charleston, and they do a really good job with helping small businesses develop their business plans, develop financial statements and projections, and actually putting loan application packages together. And so they are a key player, a key partner of SBA. We have a women's business center. It's called I Hope Women's Business Center. And as you may imagine, their real mission is to assist woman-owned small businesses. And so they can do all of those same things as well. And then finally, we're really happy, and they're slightly over a year old now, but they're still kind of the new kid on the block, if you will. We were able to get a Veterans Business Outreach Center here in South Carolina, and it is headquartered or hosted by the Citadel. And so we have all four of those organizations. They can help you with your business financing. So that is key. Again, these are programs that are funded through the federal government. So take advantage of your tax dollars, right? You need to take advantage and use these organizations to help you start and grow your business. So just a couple of one thing I want to make sure we're clear on is I get calls all the time from businesses looking for grants to help them start and grow their business, and so SBA does not have grants that assist with starting and growing your business. Okay, as a matter of fact, we don't even make direct loans to small businesses to assist those business startups or business growth. And so you're probably at this point you're wondering, well, why in the world are you even on the call? But I think I'll make it a little more clear as we go through. So just wanted you to be aware of that. Again, create your business plan. You've got to have your business plan to become what we call lender ready. Okay, so you don't want to go in. You need to, when you're approaching a banker, and you're getting ready to hear a couple that will come on after me, but you don't want to. You want to have your ducks in a row. You want to know exactly what you're going to do before you start having in-depth conversation with a banker. Okay, so the key piece here is to create your business plan. We could do a whole nother webinar on nothing but a business plan, so I'm not even going to go into it. But I want to stress the point that it is very important. If you come to the lender matchmaker, we strongly encourage you to have a business plan with financial statements in hand, so you can have that good conversation, educated conversation with a banker. Too many times I get calls and I'm discussing a project with a potential borrower, and I ask them, what size loan do you need? And the answer I get, how much can I borrow? And that is not how commercial loans work. Okay, you need to know specifically, how much your loan is going to be for, and what those loan proceeds are going to be used for. So that is very important. Again, our resource partners can help you with the business plan. We also have sample business plans on our website, sba.gov. And so that's a good place to get started. So let's talk more about how SBA comes in and what factor or how we play in this process. And so we have what we call SBA backed loans. And this is our loan guarantee. This is the real bread and butter. And this is really what I'm going to talk more about today. Okay, so we do have these SBA backed loans. We have programs for private investors. So if you have a business if you have a business that is in business, you have experience in business, and you're ready to scale and grow, and you're looking for private investors, we do have some programs for that. We do have some research and development awarded funds, and this is as close as we get to grants. But if you do research and you want to do research with the government, then there may be some funding available for you in the form of, yes, a grant, right? So, but it's not to help you start your business. It's to help do research and development work for the federal government. And then finally, if you're in the construction industry, we do have a surety bond guarantee program. We do workshops on that as well. That can help you get bonding. It can help you increase your bonding, and it can help you actually reduce your bonding cost. So that's just another program. Don't have time to talk about it today, but just know it's there, and there is more information on sba.gov. So let's talk a little more about our loans. So SBA works with approved lenders to offer microloans and SBA backed loans. And by doing this, the lenders are able to offer competitive terms, lower down payments, flexible overhead requirements, and especially with the microloans, it comes with counseling and an education component. And so just an easy way to think about this is that SBA provides an insurance policy to the lenders, okay? And so let's just say the worst case scenario, the loan were to go in default, and the lender were going to take say $100,000 loss on the loan, okay? So SBA, if they had an SBA loan guarantee, typically those range from 75 to 85%. And if they had a 75% guarantee on that, they could come back to SBA and say, hey, Mr. SBA, I lost $100,000 on this loan. We would like repayment on the guarantee portion. And so SBA would actually pay them $75,000, and they would only incur a $25,000 loss versus a $100,000 loss. So you can see it reduces the risk and encourages them to make loans to small businesses. It basically gives them that backing to get them over the hump, if you will, to get them comfortable with the loan so that they will make the loan to small businesses. So how does it work? So you're going to go to our resource partner, hopefully, and you're going to build your business plan, and you're going to get all your financial statements in order. You're going to have projections, and you'll put together a loan package with that resource partner. You're going to go to the lender of your choosing. And I always encourage people to go to the bank, whoever you do business with. If you don't have a relationship with a bank, it is important that you create one. So even if you're just working, doing business at a local branch, reach out and talk to that branch manager. They will be more than happy to get to know you. And I'm sure they would like to know, what you're trying to do as far as your business goes, whether you're trying to start a business or if you're growing a business. They want to know, and I can promise you they're going to want to help you if at all possible. And then it's up to the lender to actually choose what loan program they use. So they may or may not want to use SBA. That is their decision. So it takes 3 partners for SBA loans to work. You've got to have the lender, you've got to have the business, and then you've got to have SBA. So if they choose SBA, then they just simply submit their loan to SBA for approval, and SBA issues that loan guarantee to them, and they're able to close the loan and get your financing. And so just to keep in mind, we don't make the loans directly other than disaster loans. We don't have grants for small businesses. We don't set interest rates. And so we do impose caps. We don't allow lenders to just charge anything they want. We do set limits on what they can charge, but the interest rates are actually negotiated between you and the lender. So let's just take a look and look at the advantage of SBA's guarantee. And really this explains how and when the SBA guarantee, the bank would use the SBA guarantee. And I like to explain this as a spectrum. One end of the spectrum, you have your very best business borrower. They have plenty of equity. They have plenty of collateral. They've been in business for years. They're profitable. They can go to any bank in town and get a loan without SBA's help. And so because of that, they are not eligible for SBA. And then on the opposite end of that spectrum is that business that's not viable. They don't have a good business plan or a good business model. They don't have anything to contribute to the project. They don't have any equity. They may have poor credit. All of those types of things just make it not an unbankable type project. And so SBA cannot support that either. And we fall somewhere in the middle. Maybe that business needs some help in some form or fashion. Maybe they have a collateral shortfall. Maybe they need longer loan terms. Maybe they need lower, maybe their loan payments need to be lower. Using SBA, the lender can extend the terms, lower the down payment. and sometimes maybe it's a startup business and it's a good project, but the lender just feels like they need additional backing. All of those are situations where SBA could come into play. So the benefits of an SBA loan, number one, we can provide longer financing up to 25 years for real estate, 10 years for working capital. Our interest rates are based on Wall Street Prime. We can help provide lower payments. We do not allow renewals or balloon payments. And so that's a situation where, the lender may set the term of the loan based on let's say 10 years, but then they have a call or a balloon payment at 5. And then you either have to renegotiate that or refinance that. So we don't allow that. We want it to be set for the entire term of the loan. In some cases, you can transfer the loan to a new owner. We do allow for potential shortfalls on collateral. This is very important. And so if you have good cash flow, there are situations where SBA will approve the loan even if there is a collateral shortfall. And we see lenders using our programs for that a good bit. And then increase cash flow. By using SBA, they're able to extend terms, lower your payments, increase your cash flow. You do have to be a small business. You do have to be for a for-profit business. Now, 99.9% of businesses in South Carolina are considered small, so that's really not an issue. We do get calls from nonprofits from time to time. We are not able to assist them. You do have to have repayment ability for the loan, of course. That lender does not want to collect his loan from your collateral. He wants to collect it from the revenue your business is generating. And then franchises, they are now eligible. This came into fully eligible, I should say. This came into play a while back, but franchises are eligible. You do have to be located in the U.S. as well. Most commercial loan purposes are considered eligible too. Now, some things that are not eligible, we get a good number of calls on these too, but we cannot assist or fund any type of real estate investment. If you're planning on buying houses and flipping them, that is not an eligible purpose. Lending activities are not eligible. Any type of pyramid sale is not eligible. Long-term real estate rental is not eligible. We can finance hotels, those types of things, but just residential rental, long-term rental, we cannot do. Of course, anything illegal we can't do. Gambling activities are not eligible. And again, it does have to be a for-profit business. And then finally, you can't limit membership for any reason, and you may wonder what that is, but a good example is like a women's health club. If they only accept women and no men, then that would not be an eligible project. It has to be open to everyone. Use of proceeds, I'm not going to go through this, but really any commercial loan purpose is an eligible use of proceeds. In some situations, we can refinance existing debt. So that's, I guess, one that just be aware of that. We can also finance changes of ownership. So if you were purchasing an existing business, that would be eligible too. So shift gears just a little bit. I want to talk quickly about so that was the 7A loan program. So I just want to talk quickly about our 504 program. This is a program to assist with the purchase of fixed assets and real estate. It's a good way, good option if you're going to buy your building, if you're leasing a building and you're ready to buy or you're ready to build a building. This is a good program to use. It does have a limit of $5 million, and it's a leverage program because you use different sources of funding. Okay, so you're going to have a commercial lender that's going to do the first 50% of the loan. You're going to have what we call a certified development company that will do the next 40%, and then the business will need to inject 10% into the project for 100% of the financing. It is for long-term fixed asset financing, maturity generally 10 to 25 years. And now on the 504 piece, That interest rate, I think right now is about 6%. And for a 25-year term, it is fixed, so that's below prime, makes it a very attractive product for fixed asset financing. Or if you're leasing a building and you need to buy your building, definitely investigate this one. Maximum interest, it is established when the debenture is sold. So SBA actually provides the funding. It's sold on the secondary market, and that's when the rates are set. But again, it's right around 6% right now. Determine your credit worthiness. I don't think I'm going to have time to go into this in detail, but again, these are the types of things that you're going to want to see addressed in your business plan, and our resource partners can help you with this. Lender Match. All right, this is a good tool from SBA. It is on our website. It simply helps connect you to potential SBA lenders. You go to our website, click Lender Match, answer about 20 questions. Lenders have 2 days to accept your offer. And if they like what you have submitted, they will accept it, and you will get a list of the lenders that would like to talk to you about your project. They don't get your information, but you get theirs, and you're able to pick, however many you would like to talk to about your project. So just want you to be aware of that. Again, SBA.gov, Lender Match is where you find that. This is just a slide with our contact information. So you'll have that. I'm a one-person office in Charleston. We have now, I think, 5 in Columbia, and then we have 1 up in Spartanburg as well. But you can get our office directory. All of our contact information can be found here on the website. And I understand we're going to take questions at the very end, so I'll hold off on that. And I think hopefully I didn't run over too far.
No, you're great. Thank you so much, William. We appreciate your time. And like I said earlier, if you have any questions, drop them in the chat and we'll try to answer as many as we can at the very end. And then next up, we've got Mark Rains with Synovus. So while he is setting up to share his screen, a little background about Mark. Mark Rains has been with Synovus Bank for almost 15 years, and he's currently the Synovus SBA lender for the state of South Carolina. He graduated from Georgia Southern University in 1996 with a degree in finance, and after college, he started his banking career as a teller with First Union National Bank, later Wachovia Bank, here in Charleston. He has since worked for multiple financial institutions in different capacities within the community bank. Mark enjoys giving his time to the community, holding several roles, including Provident Business Financial CDC Board Vice Chairman, West Ashley James Island Business Association Treasurer, and Park Shore Swim Club Treasurer. So we are very excited to have Mark kick it off.
Let's see. Thank you. Appreciate the introduction. Glad to be here to talk about how to demystify SBA loans. I will say that William shared quite a bit of the same information, and you'll probably hear Kate later on shared some of the same information. So it's the resounding tone that hopefully everybody will hear throughout of what you need to go ahead and get funding. So that's part of that demystifying SBA loans. So on the agenda today, just I want to talk a little bit about some business statistics, what makes a good SBA loan, the business plan, the 5 C's of credit, capital needs, collateral equity, SBA loan overview, benefits, SBA loan types. We may be able to go through some of those examples, and then SBA 7A use of proceeds, and then eligibility quick tips. And so we'll go through that through this agenda. So just some quick statistics. There's 32.5 million small businesses in the U.S., and they employ 59 million people in the United States. 40% of small businesses are profitable, 30% lose money, and 30% break even. So 50% of small businesses fail within the first 5 years, 21.5% in the first year, 30% in the second year, and 70% in their 10th year. So, but the longer the company has been in business, the more likely it is to stay in business. So, but why do they fail? They run out of money. They're in the wrong market. They lack research, maybe a bad business partner, bad marketing, or just not an expert in that field. So 23% fail due to having the wrong team in place. 19% fail because of their competition. 42% fail because of the lack of interest in products and services. And 1 in 3 restaurants won't survive their first year. So I know that's all, oh goodness, talking about failures, but that's why the SBA is here to help with the funding and the running out of money piece. And also with the partners that they support, that William talked about with the SBDC, the Women's Business Center, VBOC, SCORE, to help you come up with that business plan, and to get the funding. So, in 2023, the SBA approved nearly 57,000 loans, which accounted for $27.5 billion. And the average SBA loan was about $480,000. Startup costs for a business varies depending on the model, location, industry. But first year costs, you're looking at $30,000 to $40,000, and that's just to run the business. That's not paying any salaries. That's just a normal running of everything. So SBA loan overview, like I said, William talked a little bit about this already. What is an SBA loan? An SBA loan is really just a bank loan for that has a guarantee on it, and it's for riskier loans. Okay. And the SBA, exists because they wanted it back in 1953 when Eisenhower created this, the SBA. The mission is to aid, counsel, assist, and protect the interests of small business concerns, to preserve free, competitive enterprise, and maintain and strengthen the economy of our nation. So that's why the SBA is here. And it works with the banks to supply that money for riskier loans. So William talked a little bit about what the guarantee does for the bank. It makes us feel safer to give us a 75% guarantee in case of default. But why is it there? What are considered riskier loans? Well, a startup business is a riskier loan. An unsecured loan where we don't have much in collateral, that's a riskier loan. Less money down. So, and you'll see later, you're going to have about 10% at least into your project. Industry related, it may be a difficult industry that you're in. And then projections-based loans. In most cases, that's going to be a startup business, but it could also be when you're growing your business, what you're going to be adding to your business that's going to create those new projections. So, in order to get an SBA loan, you have to be eligible. So, and again, William touched on this. That's an operating business, a for-profit business located in the United States, meeting the size requirements, and demonstrating that need for credit, right? But we're not going to do speculative lending. We're not going to do nonprofit financing businesses, life insurance companies. That's not agencies, life insurance companies like State Farm. We're not going to do something for them. But we will do it for, let's say, a State Farm agency, just that agency themselves. Okay. Pyramid plans, gambling, all those kinds of things. Again, like William has already touched on. But there's also other eligibility considerations. Do you have any lawsuits outstanding? Are there, what does your credit history look like? Do you have any misdemeanors or felonies within the last 6 months? Are they cleared? Are you in the middle of a divorce? Do you have tax liens? Are you a U.S. citizen? have you filed your tax returns? That's a big thing. And then bankruptcies and foreclosures. All right. So those are all other eligibility considerations. So why SBA financing? SBA financing, as William said, has longer amortization than a conventional loan. It helps to improve your cash flow. Lower equity requirements. It can be as little as 10% for existing companies. SBA will allow for a collateral shortfall in business assets and personal, and as long as you've also added your personal real assets as well to the collateral pool. If it still falls short, the SBA will allow approval on that. However, that is going to be a bank credit decision. Okay. And then no renewal risk. And again, William touched on that. It's fully amortized loan, no balloons, no origination fees. You have to do the initial appraisals up front, but after that, you don't have to have new appraisals from a maturity standpoint if you were going to do just a normal conventional loan. William also touched on a little bit about the 5 C's of credit, but I'll go ahead and go through this again. We're going to look at your character, your capacity to pay, your capital, conditions of the economy, the industry, that type of thing, and collateral when we're actually doing an underwriting of for all the funds. Most people are familiar with the character piece, I think, which is the credit history. That would be the main thing. But SBA gets in a little bit deeper with lawsuits, criminal history, that type of thing. The other thing that we definitely look at is experience in the industry. So those are all going to be a big part of your business plan. We'll talk a little bit about that in just a few. Capacity to pay. So ability to pay back the loan. As William said earlier, we don't want your real estate. We don't want the equipment. We want your cash flow to pay us back. So either it's historically demonstrate that you can pay us back through your cash flow from daily operations, or through your projections that you've come up with for your startup business. Capital. We want to see the equity that you're going to be putting in, and then also that you're going to have money still set aside after you close your loan, that if something were to happen, you had something else to fall back on. And that may be a combination of things. It could be that you have some money in that's invested. You could have a spouse also have additional income. So that's the type of thing that we want to make sure that you're going to be taken care of personally on the outside of things. And then conditions. What is the state of the economy? What does the industry and the competition look like? And then finally, collateral. We want to make sure that it's as much collateralized as possible with your personal and business assets. Okay, up to 100% of margin collateral. So what do typical loan structures look like? In the 7A program, the loan size that we do here at Synovus are $350,000 is the minimum, up to $5 million, which is the maximum for an SBA 7A loan. Okay. The term is anywhere from 10 years to 25 years. And it can be 10% or more down, depending on what where you are in your business. It cannot be borrowed funds, and it must be taxed dollars. No mattress money. So it's not like, hey, I found, $50,000 so I can put down. Can't do those. So loan proceeds, what to use for. Again, William talked a little bit about this. It's for, anything commercial that you can think of: real estate purchase, business acquisitions, business expansions, buying furniture and fixtures and equipment, those types of things. Debt refinance, that's a little bit more difficult to do, especially, and it's really more of a credit on our side standpoint. but that is a possibility, just depending on what the original uses of the debt refinance were for. We do want to see direct industry experience, and then that goes into the business plan. What do we need in the business plan? And that's where all those partners that William talked about, they can help you with creating the projections and with the assumptions and getting all the meat of your business plan into what we need to do to understand what you're going to be doing as a business owner. So the business plan, it's a roadmap. It should be built on all the hard evidence and research that you've done, that those business partners have done at the SBDC, at the Women's Business Center. They're going to help you identify a target market, identify, help out with the projections, like I said, what your capital, your sources and uses of the funds that you're going to need. And then also talk about your resume and the industry knowledge and how you should look at discussing that. And then also knowing your competition. And again, understanding your total capital needs in that business plan of what is going to be needed. And then finally, the cash and equity that you're going to be bringing to the table. Where's it coming from? The SBA has to source it for the last 2 months to where, whether it's in a checking account, whether it's a money market account, those types of things, we have to look at where it came from. It's not just, it just appeared. Now you can have your equity in a form of a gift. So we'd have to have a gift letter. There are some cases where you can borrow the funds, but you have to have a outside income that can pay for those borrowed funds. So that's the only other time that you can look at, and just be a little bit hesitant on borrowing those funds, and talk to hopefully me, the SBA lender, for those discussions. And then I was going to go through some examples, but we'll just for time. And also because we want Kate to go ahead and talk about the Climb Fund and save some questions towards the end. And that's what I have for today, Christina.
Oh, perfect. Thanks so much, Mark. Appreciate you. And then last but not least, we have Miss Kate Polcha coming on from the Climb Fund. And while she's sharing her screen, a little bit more about Kate. She has worked in the banking and finance industry for over 25 years, holding positions as a branch manager, loan officer, regional sales manager, underwriter, and assistant vice president, senior portfolio manager, have ultimately led her to her position as risk manager at the Climb Fund. In Kate's role as risk manager, she is tasked to lead both the lending team, overseeing the loan officer statewide, participating in business development activities, overseeing intake, underwriting, and loan closing, as well as the portfolio management team, which serves the Climb Fund's loan portfolio. She monitors asset quality and assists clients with post-closing on their loans. So, Kate, please take it away.
Good morning. Thank you so much for having me. And I'm proud to introduce the Climb Fund. We are a 501c3. We're a nonprofit organization here in this state of South Carolina. Our mission is to create access to capital for small business owners and entrepreneurs historically denied traditional financing. And our goals are to increase economic opportunity, promote social economic justice, and foster job creation. So a majority of our clients are BIPOC-owned businesses, including Black and Latino-owned enterprises. We aim to assist women-owned, veteran-owned startup businesses and rural businesses. We do work very closely with SBDC and SCORE, which you had heard William mention earlier. We also work closely with iHope. So we're a mission-driven lender, and the way that we're different is that we do, you've heard a lot from Mark about some of the SBA programs. We are an SBA micro lender. So those are loans that are for up to $50,000. And then we also have, other loans that are Climb Fund loans that can go higher than that. We will be participating in the lender matchmaker at the Citadel in August. So what's interesting is I took a look at the poll results and I saw that about 60% or so of the participants on this call are businesses that are less than 2 years old or have not started or are going to be startup businesses. So you are business owners that we would be interested in speaking to. What makes us different in a lot of ways, and one of the things that I'm proud of is, how we provide some assistance services, what we call TA. And for new businesses and startup businesses, you often, there's a lot of questions and support that's required. And so we are, as a lender, very focused on assisting our borrowers from the time that they come to us and apply. And we take a look at the business plan, which is so important. We want to support you. We don't want to put you into debt. We want to put you into business, as one of my colleagues here likes to say. And it's very true. We want to support you by offering you opportunities to speak with consultants. We want to give you marketing support. We want to give you support in explaining projections. So we do, from a lending perspective, have some additional flexibility. We can look beyond just your credit score. We can look beyond if there are circumstances that would prevent you from obtaining traditional financing. And that is what we do. We do not compete with banks. So Mark may get in touch with me and say, hey, we have someone who doesn't qualify here, but they may be somebody who qualifies through the Climb Fund. Of course, we do have underwriting requirements. We are still going to look at your credit. We are still going to look at, owner's investment, what cash you bring to the project. We are going to look at if you're a startup, we're going to look, at your personal credit history, because that is obviously something that's an indicator of potentially how you are conducting your finances and your potential to pay. But again, because we lend a little bit differently, our requirements are a little different than a traditional lender. So we do require, something that I do like to mention is that with our loans, we do require a personal guarantee on a business loan. So you are still going to be personally obligated on any funds that you borrow from us. So if the business is not successful or ceases to continue, you still do need to repay the loan with a personal guarantee. We require a bank declination. And I think that that's something that when you come to us, in order for you to qualify for funding for us, we need to see that you have spoken to another lender. It does not necessarily need to be a formal declination. It can be a conversation that you've had with another banker, and they could just give you an email that simply says, yes, I have met with you. And, based upon the fact that you're a startup, or, perhaps there's a credit issue, you may not qualify here. We will require that in writing ahead of being able to accept an application. So we do require, as a part of our application, a business plan. There is, again, the bank declination communication. There is an application that is online. There is a $125 participation fee. We do have a lending application that is available in Spanish. We do also have the ability to convert our website from English to Spanish. We do have a loan officer here in Charleston who is Spanish speaking, as well as another team member who also can assist clients. Our average loan size is about $47,000. We don't have a minimum or a maximum loan amount at this point. So you can come to us with something as small as a $5,000 or $10,000 ask, and you can come to us with something as, a $250,000 ask. It all depends upon the purpose of the funds. And again, We also look at, your character, your capacity, collateral, capital, the conditions, all of the things that Mark has mentioned previously. However, again, we do have the ability to make a flexible lending decision based upon the individual circumstances of each loan. I want to also mention that we offer a application workshop. It is extremely helpful. I'm happy to get information out to you. We'll have information about it at the Lender Matchmaker event, but you can also get information in regard to that on our website. We offer them live. There are some that are pre-recorded as well, and it gives you a tremendous amount of information in terms of the requirements, and goes a little more in depth to answer questions that you may have in terms of how to get assistance to get all of the documentation and information that we do require on our checklist. So if there's any other questions, please feel free to let me know. That's all I've got.
Great, thanks so much, Kate. And let me go back to our current slide here. Ooh. All right, down to the Q&A. So we do have some time left for questions. Let's see here. I'm trying to pull up a question here. Ooh, okay. How do the SBA loans differ from SSBIC? And I do not know what that acronym stands for. Is William or Mark?
I think they're referring to the SSBCI program, which is more of a supplemental program for real estate. So essentially, it's a program where I think the minimum is $75,000 that can be lent in this program. However, it's for real estate. Let's say you buy a piece of real estate for $1 million, but you only have 10% to put in. But conventionally, they're requiring 20% down. Okay, so the other 100,000 or 10% would come from this program, the SSBCI program, and so it would mirror the term of the loan, the conventional loan. And you would only pay one payment. The bank would actually make the payment to the BDC who sponsors this program, and they would actually mirror it. So it's a totally separate program. It's more of a supplemental. It's not, and it's only for real estate. So it's not something that I deal a lot with. But I can certainly, if you have that need, I can certainly pass you on to the BDC to discuss more.
Yeah, and I'll just chime in too. So it is not an SBA program, but the small business development centers have actually they received some funding for some consultants that specialize in the SSBCI program. So if you had interest in that, you may want to start with the Small Business Development Center and see if you can get connected with one of their consultants.
Great, thanks, guys. And then I'm going to combine this question a bit. So say if you're looking for a loan to purchase a building, can you also use funds from that to purchase furniture, equipment out of that same loan type?
Yeah, that's the great thing about the 7A program. You can kind of throw everything in the kitchen sink in it for the most part. It's for purchasing the building, doing the renovations, buying equipment, buying the furnitures and fixtures, all that kind of stuff, even putting in working capital. So we have different buckets that we just have to outline, and you just have to identify what each bucket's needs are. So when we go and close that loan, you get X amount for purchasing the property, X amount for the renovations, X amount for the furniture and fixtures. Now we can adjust those as, possibly throughout the loan after the loan has closed in those buckets, but We want to be as close as possible when we're going to close that. And that's where the consultants help with SBDC, SCORE, and Women's Business Center and VBOC, but also your SBA lender.
So, yeah, and so just to chime in again, I mentioned briefly the 504 loan program, which is for real estate and fixed assets and, heavy equipment. It can be used for that as well. But it's specifically for real estate. So you cannot use that program for furniture, fixtures, working capital. But what you could do is you could actually get a 504 loan and a 7A loan, to cover any of those types of expenses that you could not put under the 504. So you could actually have both. And I will say one thing, the biggest competitor for 504 is actually our 7A loan. So a lot of things you could take it either way. It could go just 7A or it could go 504.
Sure. And Kate, did you have anything to add?
Sorry, guys, I have you on mute just because there's background noise here. I don't have anything to add at this time, but similarly to what William is saying, just that we can do a combination of loans to make sure that, and we typically do a combination of loans to make sure that all of the clients' loan purpose needs are covered.
Very good, thanks. And I think for the sake of time, we'll answer one more question. A couple of y'all mentioned that you look at character. Could you define a bit more about what character is, how you determine if it's good or bad?
I'm happy to answer that. When we look at character, I think we're largely, we are talking about, having to do with credit and prior payment history. And, there are times, with us where we may have a client who does have some credit issues, and we're willing to listen to explanations on that. Because we do understand that life happens. And sometimes there are issues that do come up that maybe from a traditional banking standpoint wouldn't make you qualify. But from, a lending exception here, we are able to look at it and say, hey, this person had there was a period of time in their business where, they suffered, and they've now made, payment arrangements, and they're actively repaying. So, we look at efforts to repay and reasons for why maybe there could be an issue with past credit. So that would be, one issue with regard to character. I don't know if anybody else wants to add to that.
No, I mean, I totally agree. It is on a case-by-case basis. It's definitely goes down to your explanations of what has occurred. It could be something that's totally outside of your control, and there's a good explanation for it. But then there's other things that you just can't get, that we from a financial institution just can't get past. From a character standpoint, but it goes to how you're living your life essentially. Are you paying your bills? Are you following the laws? All that kind of stuff. So, are you paying back your government government loans? Did you have student loans and you didn't pay those back? That's going to be part of that character. So.
Same. Anything else, William?
No, I think that's well covered. SBA has relaxed a little bit on what we do as far as character determinations and that kind of thing, and borrowers that may have had felonies in the past. SBA is able to overlook most of that now, so I think that's a help.
Well, thank you all so much. So I think for the sake of time, we're going to start wrapping up. Just as a reminder, this webinar is being recorded. We can share out those presentation slides to you all that have registered, and that does have our presenters' contact info on there in case you want to ask them some more specific questions. And again, just another plug for our upcoming lender matchmaking event where all these great folks will be there in person and on site. And again, you can kind of have that opportunity to really speed date with a bunch of different lenders in one place for a full, very long morning their afternoon day. It's from 10 a.m. to 2 p.m. It's also a great opportunity to network, meet some other business owners, connect with different resource partners, and get some information about putting together your business plans and see what financing options are out there for you. So we want to say thank you again for attending and joining us. We hope to see you at that lender matchmaking event, and then a big round of applause for our presenters today. We really appreciate you all taking the time to do this with us, and we'll see you at the Citadel in a few weeks. So cool. Thanks, everybody.
Thank you.
You.
Thank you.